All right. So the open and close is the body, and then we have the high as usual and the low. The distance between the high and the open or close, depending on is it a bearish candle or a bullish candle, it is defined as wick. Similarly, the low and the open or close is also defined as wick. So this wick, this high and the low, the wicks are extremely important. They are also known as shadows, and they are equally important as the body. Okay, good. Now let me help you to identify the correct bullish candlesticks. It is the close price is higher than the open price. If the close is near to the candle high, it is considered to be a strong bullish candlesticks. Some of the examples of bullish candlesticks, don't worry, I'll show you ample examples from past and live situation now. Hammer and bullish Marubazu. Marubazu is a candlestick. It's one of my favorite. Bullish Marubazu is this candlestick, last but one, in which there is no wick at the top. They are extremely strong. They can be very strong. So this is a bullish Marubazu here. Similarly, the bearish candlesticks is when the close price is lower than the open price. So if the close price is near the candle low, it is considered to be a strong bearish candlestick. Some of the examples of bearish candlestick, I'll show you many in a minute. Inverted hammer and then bearish Marubazu. So the first candle in front of you, I generally prefer to color the body bearish for red and bullish for green. You can change, you can select any color. Many people prefer black and white and so on and so forth. So this first candle in front of you is a bearish Marubazu because it is not having a wick or a shadow at the end, or a very negligible one. Yep. So this is a bearish Marubazu. All right. Now, bullish candlestick pattern formation. I'll define now some of them, and I will help you to define yourself all of them. Okay, so I'll define for you some of them. Single candlestick, hammer. Hammer is a type of candlesticks, and okay, let me. No, I'll define. Double candlestick pattern is a bullish engulfing. Three candlestick pattern is a morning star. So let me define one by one. Single candlestick pattern hammer should appear at the end of a bearish run, and it has the potential to change that bearish run to at least a consolidation or a bullish start. So what is a hammer? Hammer looks like actually a hammer, as the name indicates, and the wick and the bottom wick must be greater than twice the body length. So if the body is X, the bottom wick here so it must be greater than or equal to 2x. Then only it will be a hammer. If it is 1x, people say it is a hammer, you say no. If it is 1.5x, you say no. If it is 2x or more, then you say yes. Okay. Now, two candlesticks, bullish engulfing. Bullish engulfing is that kind of pattern in which the second candlestick, of course, this has to appear at the end of the bearish run. So the second candlestick body has to engulf the first candlestick body completely. So that is an engulfing, bullish engulfing. This is extremely powerful. If the second candlestick body is engulfing the first candlestick wicks also, that is more stronger. Now the third one is a morning star. Probably now you have identified the last two candlesticks are engulfing. It may not be always in a morning star. So in a morning star, what we see, not in FX, but in commodities or stocks, you can see the second candle gaps down, the first candle, and the third candle gaps up from the second candle. So it looks like a morning star. The most important part is whether the gap is there or not. That is all right, because in FX market, which is 24/5, there is no gap as such. But this one here, the most important part is the close of this third candle has to be more than half of the first candle. So that is morning star. So these are the way in which you need to define. So let me help you to define the bearish candlestick patterns. Was a hanging man or inverted hammer or a dark cloud. Inverted hammer is just the opposite of the hammer what you saw, but it should appear at the end of a bullish run. Second, two candlestick dark cloud cover can be extremely important, or a bearish engulfing. The difference between bearish engulfing, as you can see, engulfing has to engulf the entire body, but the dark cloud cover, the close of the second candle has to be beyond the midpoint of the first candle. So these two are extremely powerful. The third one is exactly similar to the morning star but upside down. So I already told you, and that is known as evening star. Okay. Now I'll show you some examples in live chart, in past and present, from bullish candlestick reversal patterns like hammer, engulfing, morning star, piercing, harami. The most important you need to remember is all this reversal must be seen with a context. If there is no context, there is no candlestick. This context can be demand, supply, or sweet spot of Fibonacci. Okay. So let's go to show you something. So I'll show you this one here. This is a hammer here in front of you on August 23rd is a hammer because the low of this low wick or the lower shadow is twice the body. And this, the context here, the most important part is if I draw a Fibonacci from this point to this point, this hammer is exactly appearing at the 50% of the Fibonacci level. Alright. So this hammer itself has moved the market from this to there roughly 1441 pips. Similarly, this one is a bullish engulfing. As you can see, the body, the green body has engulfed the red body. Alright. So these are two examples, and this one has moved the market almost to 843 pips. And if you see if you ask yourself what is the context of this bullish engulfing, this is the 78.6 Fibonacci from here to there.